Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo, not the video, for the 8th of August here in 2023. And you see some red on the market today with the stocks closing down, at least the equity futures closing down about 0.5% for the Dow and the S&P. The Nasdaq was the weakest, down about 1%, and the Russell almost 1% as well. And 6 of our 9 sectors were on the red or the sell side activity today, weakest being B, materials, P, staples, but the 3 bullish sectors caught a bid on crude up 1%, that's XLE. V is going to be our healthcare, that's up about 1%. And U, utilities, up, roughly speaking, 0.5%. And to our market watch, you see a couple of things jump off the chart at you. Number 1, Eli Lilly up 15% on earnings in today's session. That certainly helped some of the bull side, but it was Apple. Apple actually ended the session up just about 1%, a little bit less than 1% by the close. So healthcare was a little pocket of green. Energy, the sector, was a pocket of green, and some other stocks down here. We'll get to Disney a little bit later. But that's the market at the close. On the intraday chart, it was much more bearish, and the market was down almost 2% by mid-session and caught a big reversal to close just a little bit above where the market opened in the gap down. So that was an intraday reversal on the equity futures. But again, Nasdaq was the weakest, closed the weakest despite the intraday rally. Taking us back to the hourly chart and to individual stocks, we have some things to look at. Let's start here with Eli Lilly. Eli Lilly on earnings up 15%. Now on the daily chart might not look that impressive, but on the weekly perspective, this is share prices going back to 2019, and Eli Lilly, at least at that point, was around 100 per share, and since then has continued a strong weekly chart uptrend and daily chart uptrend, giving way to today's breakout. And that's going to be our number 1 stock, the largest market cap name, at least in today's session on a down day, making a fresh new 52-week high. Behind that is Walmart and some other names. But let's start with Lilly and some of the other earnings plays. So behind it was Duke Energy and Amgen recently earnings as well. But this one's going to be the key to watch. It's Disney. And it's off at those lows, 85, 86 per share. And it has, I say a uptrend, downtrend. It has a downtrend if we look at this weekly perspective. Disney shares peaked in early 2021, 200 per share. Now they've slid all the way to new 52-week lows around that 85 per share level. So going into earnings, Disney is going to be at lows not seen since the pandemic lows, March 2020. Not a lot of stocks share that illustrious or infamous title of being back where they were at the lows of the pandemic. Disney is one of those. So that's where we'll go into earnings. And on Disney, its implied volatility, 80%, and it has the expected move of about $5. So could see the stock go to 80. That would be maybe a downside, or I should say 83. Could see this go up to about 92, 93. Just looking at expected move, you'll have a better sense about how the market closes or how Disney does its earnings after the bell tomorrow. And let's peek at the remainder of the week right here. Nothing really except for the China economic news, weaker than expected. Not necessarily something we had on the econ calendar. We had UAA, an airline, UPS, Rivian. Rivian is going to be in earnings. Those were today's session. Tomorrow, we're going to look at Disney and Plug. Those are earning stocks. Alibaba, on Thursday. But it's going to be these 2 reports tied together. CPI, the Consumer Price Index, on Thursday, and the PPI, Producer Price Index, follows it right up on a Friday. And no major earnings coming out in the end of the week. So that's going to default us to the bigger picture. And that bigger picture is, right now, on a little deeper pullback in the stock market. From the Nasdaq, that's taken us down from 16,000 currently just above that 15,000. And on the S&P, that's taken us down from just above 4600, currently about 4500 in the S&P futures. Bonds have caught a bid, at least in the last few sessions here. And crude, after a stellar, I think I had this around 20% low to high. Yes, 23, 24% low up to the most recent high. That's a very rapid recovery in crude oil. And that could play a role in the upcoming CPI and PPI reports and what the Fed is going to interpret from those inflation data. Not the first time we've seen crude go from 67 to about 83. The last time was in March, and that hit the resistance and then played to the downside. We're watching that in the week ahead, and of course any other information in CPI, PPI reports. Beyond that, let's look at the individual stocks that made 52-week highs. Some of them are surprising, some of them might not be. So looking at these, this is our traditional scan of stocks making 52-week highs in the S&P 500, and I sort them by market cap. So Eli Lilly, right there with a 15% gain. That might not be surprising to the upside, but something that could be surprising. And what I'll do for the video tonight is focus your attention on the weekly chart on the right, which is the broader trend, and the daily chart on the left. And these stocks are all making 52-week highs. In some cases, if you go far enough to the backside or to the left in historical charts, won't do that for tonight's video, but these would represent all-time highs in some of these stocks, Walmart being a stock that's up on the upside. Marriott hotel brand, is pushing additional highs and continuing relative strength. Some of the other ones we'll look at, Constellation Brands up there as well. Speaking of Well Tower, and we have Constellation, as if the brands weren't enough, Constellation Energy, that's a utility, that's up there as well. And West Pharmaceutical, one that could be surprising, not surprising if you're looking at this from a sector standpoint, but surprising from a stock standpoint. Taking a look at the Analyze tab, we do have strong fundamental recommendations on Pulte Homes, PHM, and that stock continues to make 52-week highs back on the list. Trade logic in these are to join the trend with a pullback or a bullish type of a trade when the market pulls back to the rising average or some type of support level. And that's what these 52-week high scans are designed to show your attention and to look at those bullish sides short term, very, very short term, 1 week, maybe a little bit fewer than the days in a week, 2, 3, 4 trading sessions in the direction of the trend. But not all is bullish. Market was down today, yet these stocks outperformed even in a down market. But which stocks are on the mat and getting weaker? Can't get off the mat, to use a wrestling term. These are stocks making 52-week lows in the S&P. Starting at the top with a market cap, we'll look at NextEra Energy, and the logic is just the opposite. Stocks that are weak or breaking down have good odds to keep getting weaker. NextEra Energy is going to be the largest market cap stock that made a new 52-week low in today's session. We don't see the downtrend as clear in NextEra Energy as we do with Bristol Myers Squibb, BMY. That is a breakdown on the weekly perspective, just getting us back in the range. But on the daily chart, that's a downtrend, and it's going to be a weak stock, categorized as a weak stock getting weaker. Estee Lauder, that's a consumer staples, right? We think of that as a staple, but I'll let you make your own decision. But nonetheless, it is a weak stock getting weaker. Taking a look at the Analyze tab, not great fundamentals. And when you're looking for swing positions, there's a lot of candidates out there. It can be helpful to get that bigger picture from the earnings charts or the earnings list. You can simply look at the earnings per share over the years. You can look at the sales per share and some of the other statistics here in the Thinkorswim Analyze tab and fundamentals. You can also read the reports up here of each and any company you might be looking to put trades into the future. So Estee Lauder is going to be another weak getting weaker and downtrending stock making new lows. Crown Castle fits that bill as well. And some surprises could be there in General Mills. General Mills is considered a consumer staple stock. You still need to eat your cereal. You may not need to eat General Mills cereal, but even in any type of recession, you're still going to need breakfast foods and house goods. So it can be a little surprising to see stocks that are relatively decent performers underperform a market. General Mills fits that bill. And we'll also see Dominion Energy. Again, 52-week lows producing additional 52-week lows. Dominion Energy has a very special characteristic that, like Disney, it's seeing price lows not seen since those pandemic lows. Again, not a lot of stocks have that infamous statistic, and these do. Not to be outdone by General Mills, there's Kellogg, K, and one more on that. We'll take a look at Campbell's Soup, CPB, Campbell's Soup. You may not, you need to eat soup, you need to eat something. You may not need to eat Campbell's Soup products, but nonetheless, this sector, consumer staples, and certain industries within it, even things that hold resiliency in bull and bear markets, you still have to eat, you still have to drink. And these stocks are seeing underperformance. So they're weak, getting weaker, and that's something I'd pay attention to throughout the remainder of 2023. So those are some of the stocks that are outperforming, others are underperforming, and the benchmark index, S&P, for the moment, still up about 18 or so percent on the year. It's the Nasdaq that's up about 38 or so. Not all is uber bullish. The Russell's up about 10%, and the Dow's up about 5% in the big picture. Not as much to watch in this week, but we will keep our eye on Disney, and then after Disney, we'll turn back to some inflation data on the economic front. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for August 8th, 2023.